Let's get right back to Peter Schiff of Euro-Pacific Capital and talk to you, Peter, about investment strategy. You do like Southeast Asia. In fact, your Asia small cap fund is up over 40% year on year. So it's really emerging Asia, ex-Japan, ex-China that you like.
Well, I don't know that I'm going to ex-China and Japan. We're actually including those nations as well. But I do believe that there's a lot of opportunity in the Asian markets, particularly if you have a long-term time horizon. And I think eventually the Asian economies are going to figure out that undervaluing their currencies to prop up the dollar, to continue exporting to a customer that can't pay is a losing economic strategy. Look, Japan has been following that debase the yen strategy for decades. It hasn't really worked. It has slowed down the appreciation of the yen, but look at the results. Look at all the debt that they've accumulated trying to prop up the U.S. economy. China's making the same mistake right now, so are other Asian countries. But as soon as they decouple, as soon as Asian economies let their currencies rise, don't worry about their exchange rate. It doesn't matter how low the dollar sinks. Just let your currency go up. Then I think there's going to be a boom in Asia, because I think economies will restructure. There'll be more trading among the Asian economies without having to include the United States, and it will mean that the value of these currencies go up, so the value of companies that are earning revenues in those currencies will go up, standards of living will rise, real incomes will rise, everybody will benefit. And, of course, you know, it's going to be a painful transition for Americans, because now they're going to have to survive based on, you know, our own productivity, which unfortunately is very low. But we've been living on borrowed money, and we've had an artificially enhanced standard of living thanks to the fact that so many people in Asia have been willing to live beneath their means to support our standard of living. Well, when the Asian economies reclaim that purchasing power for themselves, I think it's going to be a real boom. And I think investors who are invested in these companies, particularly the more domestic demand-focused companies that are catering to the Asian consumer, I think they're going to be rewarded dramatically, not only in the appreciated value of the stocks, but the appreciated value of the currencies that the stocks are denominated in.
Peter, you said that you were interested in China. I'm wondering how exactly you're investing in China. Anything in equities? Are you seeing the ultra-low valuations we're seeing right now as an opportunity? Because certainly domestic investors aren't seeing that the same way.
Yeah, you know, the Chinese stock market has been weak for several years, and as I said, you know, it's a long-term story. I mean, I believe that the pendulum is swinging in the right direction in China. I believe they're moving from, you know, total government in the direction of freer markets and capitalism. Unfortunately, in America, the pendulum is swinging in the other direction, and I think that that momentum is going to continue. It's not going to be,
what do you invest in? How do you invest in China?
A smooth path. There'll be bumps along the way.
How do you invest in China? What would you be buying?
Well, in equities. I mean, we buy stocks. I mean, we own a lot of companies in Hong Kong and in Singapore that, you know, have a lot of leverage to the Chinese economy. But we do invest in mainland China, in Chinese companies, and we're doing this for the long term. And I do believe if you buy the right stocks there and you're patient, there is a lot of value in that market. I think right now the sentiment is very negative, so that's, you know, you need negative sentiment to buy stocks cheap. And I believe if you hold on to them, at some point there'll be a lot more enthusiasm once again for China, and people will be paying premiums to buy Chinese stocks. You just have to wait it out. But if you're a contrarian investor, if you want to buy what's out of favor, the Chinese stocks are clearly out of favor right now.
All right, Peter, very, very quickly, you like gold, but hasn't it been acting more like a risk asset?
Well, that's because people don't understand it. You know, I think it's the safe haven asset. I think the risk asset is the U.S. dollar. But unfortunately, so many people still wrongly perceive the dollar as safe. That is going to change. People will realize that there is no safety in dollars. There's no safety in any debt instrument denominated in dollars, whether it's a U.S. Treasury or a corporate bond. And I think more people will rediscover the safety inherent in gold, in real money with intrinsic value, and a lot more people are going to buy it. The price is going higher.
Peter, always good to talk to you, sir. Peter Schiff there, CEO of Euro-Pacific Capital.